Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, December the 23rd. The year's 2024. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. As always, have your risk management in place. Never lose more than you're willing to lose in any single trade. Taking a look at the pound here at the weekly open, we're 27 pips below the weekly open and 54 off the high, 21 off the low, and according to the dashboard, all the gaps have filled. And you can see here also we are in the lower wick zone of the previous week. If we take a notice here, we've got an inside bar, or the daily is inside bar. We are putting in the opening range for the week. For the year, we're 180 pips below the yearly open. Notice we dropped below last month's low by a few pips, but we're now in the previous month's wick zone. We're 901 pips off that yearly high and 233 off the yearly low. We touched the, we broke through the weekly inside bar low from 39 weeks ago, but you can see price came right back down. And for the daily and monthly inside bars, we're not even 100 pips within those ranges. Speaking of ranges for today, the pound is at 76. We only have one pair over 100, and that's the New Beast, or the pound New Zealand, at 134 pips. So it looks like traders are taking the holiday off. So if you are trading, just remember that. Be careful. Make sure the spreads aren't weird. Okay, the buy zone. We had a crossover of that daily weekly open 1, 2, 3, 4 hours ago. And now the pound's trying to come back up. In fact, the pound is coming out of the lower rat zone, or the green rat zone. And you can see here, smart rat triggered at, call it 25.29. And the original rat triggered at 25.32. So as you can see, there's pips to be had so far. A green rat feast. Now, if we switch over to the H1, just maybe I should start showing the H1. Reason being, you can see here we had a holo trade happening. So coming out of that holo zone, that would have paid off also. And the holo is the highest open, lowest open on the H1 for the day. I mean, you can use the highest or lowest M30, or you could use the highest and low M1 for that matter. But I picked the H1. But, you know, I'm thinking maybe we should even check out the M30, because sometimes the lowest open of the M30 will be the lowest open of the H1. But as you can see here, that wasn't the case. This was the lowest M30 open. Price actually dipped back into this level here, that wick zone, and then came back up and out. Something to think about. And for the pivot trading plan, price near the pivot long, that did not pay off here, at least not if you're using the H4 candles. And when I'm trading pivots, I like to use H4. I don't, because of this type of candle right here. You don't want to stand in front of a freight train, or a steamroller. You'll just get run over. It's not funny. So nowhere near S1. That was a long. Nowhere near R1, which was a short. Bambino and the flex indicator said to go long, and it worked here, and it may be working a little bit right now. Daily pivot taken out. Weekly pivot missed by 3, and we've already taken out the monthly pivot. Wick zone, in and out of that upper wick zone. Once again, maintaining that 70% or better frequency distribution. Price just doesn't like staying in those wick zones. And if you think about it, which I just did, I just realized something. You know how they say price ranges 70% of the time, and it likes to move out 30%? Well, this is actually the reverse of that. And I'm wondering if those two have anything to do with each other. I'll have to think that through. It might just be a coincidence. Let me know what you think on that. So, smart ranges here. So far, once again, 76. That's the lowest. 0 percentile. We haven't broken out. We've already seen the moves off the high and the low. High to open for the buy zone traders, 27, and open the low, 49. Price action on the pound, you can see here, we're ranging. These M30 candles are being covered. You can see that. This one hasn't been covered yet. This one hasn't been covered. This one hasn't. This one hasn't. So we got a lot of covering. But usually I only count the covers for the next candle. So it only counts really at the previous. But sometimes, like this big candle here, big range bar, and I'd look to see price get back to that open. Not necessarily today, but maybe sometime this week. And then again, most bets should be off because it is the last 2 trading weeks of the year, which both have holidays, so you have to be really careful. You can see we had a lower high trigger. We also had a lower low close above the previous close trigger here. I don't think I've got that indicator on any of these charts. But the pound's moving up nicely here. Oh, and let's see. You can see here it's coming out of a price turn wick zone on the month. You can see here Friday came out of one. Once again, price turn wick zone there. You can see right here we just had one. And right there on that M30 price turn wick zone. Notice that'd be similar, very similar to the holo. In fact, it was the holo. You can see here That would have been a nice payoff. Here on the M15, came back and touched and moved up. Also, price has crossed that psychological 25 line right there. Just thought of that. And you can see here again, we just put in a price turn wick zone. It's close, but you can see came into this range here and it's breaking out. You can see here lower wicks, moving it up. Big range bar, got covered. And the thing is, you see, everything I just said was a story. I'm telling a story. And what will happen is, if you have enough stories to tell, you can talk yourself into or out of just about anything on the chart. And that's one reason why it's best to stick with one method, one instrument. Because I was talking to a fellow trader this morning about, another method, and it's like, and it can apply to just about any method. You look at the chart and it tells you could clean up. You should be able to be driving a Lambo in a year or less, right? Even starting out with a $100 account, you should be able to turn that into $1 million account, But there's a piece missing. And I really am starting to think that that piece is simple, and it has to be money management. It almost has to be. If you think about what Warren Buffett said, rule number 1, don't lose money. Rule number 2, refer to rule number 1. So, and don't lose money, it doesn't really mean don't ever take a loss. You just have to look at the big picture. And what's the big picture say? And so, that's why the risk management is important. And, I used to always say stop losses were for sissies. And that's because the systems, when I was doing the buy zone, it was just simple. It's like you have 2 lines on the chart. If it crosses the top line, you go long. If it crosses the bottom line, you go short. So the stop loss is kind of built in. You either take a loss or you put the other trade on and you hedge, or you can double in. And people say you'll get chopped up. Well, yeah, if you take stop losses, each time you could get chopped up. But that's why you have to be a little smarter with the money management. And just trade in the direction of the candle color. So, fellow traders, I don't think I'm going to be trading or making videos maybe until the end of the week. So I'm going to wish you all a happy holiday. And definitely have a fun and safe holiday. And if you see Santa, try not to shoot his reindeer, because I happen to like reindeer meat. No, just kidding. So anyway, when you do come back to trading, whether it's this week, next week, or next year, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.